Okay, so I'd like to start this video by thanking everybody who has subscribed to this channel. We're currently at 50 subscribers, like in less than about 1 hour. I just finally hit 50 subscribers, and I want to say thank you to all my viewers. Thank you to everybody who watches these videos and enjoys the daily analysis. Also, do well to hit the subscribe button if you are not part of this 50 and join the moving train. Let's head into today's movies. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Okay, so today we're going to start by talking about the New Zealand dollar against the Japanese yen, and you can see it just got an increment of 1 point on the edge finder. On my own trade finder though, it didn't really move much. It is fundamental, and I think this may be due to either the seasonality change or the trend change currently happening in the New Zealand dollar Japanese yen. So on my end, right there, so New Zealand dollar Japanese yen is still slightly green on fundamental news, no changes, and it's just where it is. So obviously it has nothing to do with the economic data. It's definitely the technical or sentiment data. And take note, we only have this for a week. It's going to be ending on the 30th of June. So do grab a copy. I'll leave the link down below. Fill the jot form and grab a copy of the Edge Finder. It is very paramount to do. Taste it and see what it really looks like. And I bet you will want to buy it. So let's move on to the chart. The chart for New Zealand dollar Japanese yen is right here. And like you all know, I took a very risky move yesterday. I had already taken this trade at the very top. You can see where my entry is, right at the top. And currently we are sitting at 400 Naira profit. It's a demo account, just in case you are not aware. I don't like to tell people like it sounds like real money. This isn't real money yet. This is a demo account, and it's currently at 462 Naira profit. Yesterday I was seeing losses as much as around 6,000 Naira or so. I had moved my stop loss up here, but I said, well, let's just stick with the original plan, and which was stop loss was supposed to be here, costing me roughly 12,000 Naira if this trade should turn around all of a sudden and go down. So about 13,000 Naira, as you can see. But it's a demo account, doesn't really mean it's not gonna hurt. It is gonna hurt because I am really working hard to learn this stuff. So diving into the analysis, I think I made this analysis already pretty much known this afternoon in the previous video. I will put the link up here for you guys to see. Heading on to another chart I'm kind of finding quite interesting recently. It was a chart I actually opened the entire video with. I think it was the Euro Australian dollar. Yes, this is the Euro Australian dollar, and there's something quite funny here. So just like this morning, I'm going to take time to really explain this and break it down. We're going to start with the monthly view. Right, on the monthly, we have this extreme high, which is like years back, right? This is all the way since 2020 March, and it's so far away that I don't think it can be met. And if we should draw that as a market structure, obviously we might never get here in months, but then again, it's financial market. Price could suddenly rally, things could go so bad, and we'll see that immediate run. But until then, no problems. Let's just trade what we see. So I know my chart is kind of clunky right now, so what we'll do is I'm going to start by renaming a lot of these things in this instant, and then hiding the unnecessary things quickly. Okay, so on the monthly structure, this is exactly what we'll have. Yep, it's sudden, it just appeared from nowhere, but I'm going to explain it. So following the high, the really highs and lows here, the highest high and the highest low, and the lowest low, we have this high, which is at 1.9397993, and this is this low at 1.42688. Now this is the highest high and lowest low. But if we should go with that as a monthly structure, obviously then there is nothing here to trade. We do not know the direction of price. Then again, looking at that whole move, it means what we can say is there was a strong push around here. We can't find it on the monthly, obviously. So if you want to just say probably it's a downtrend, you will end up painting the whole of this area, and that is extremely vague. Same thing as if you come down here and say, oh, okay, probably it might be an uptrend on the monthly, then you have this whole area to circle out as your current very clear demand zone. But also you have this other area to circle out as your monthly demand zone also. And looking at these two things, well, it is not easy to really determine things. But just like supply and demand, whenever you see price suddenly burst out of a particular location, that should be your starting point. And as you can see, in the recent this year as a whole, all the way from February, we've had sudden push upwards starting from February 1st. You can see it right here. This was the last candle that had the lowest set of imbalance before we found this heavy institutional push. So looking at that as a credible location, we could say this whole place is now a good structure for us. This is a high, this is a low, and this is the new high. So just to draw that out using a path 2, we have this and this. So basically this is the structure we have on the monthly, and hence what it means is we're hoping for price to retrace at some point into this level. And if remember, the market is all about ifs, and if the market is really bullish, then we'll see it break above. It could even still break above from here as it stands right now, but we can't tell, right? We can't tell. So I take out all of this and let's dive down into the slower time frame. You cannot trade for a month, right? We're not position traders. Position traders could place trades there instantly and say, okay, we could take the risk. But we are not position traders. We do not have thousands and millions of naira to throw into the market. For those trading dollars, that's like a lot of thousands of dollars, tens of thousands of dollars actually. So looking down into the weekly time frame, I'll immediately pull out the already existing analysis I have. Surprisingly, for the weekly time frame, I do not even have any like major analysis because everything has been clear on the monthly. If I'm going to take the weekly time frame from the last leg, remember this is the last leg. So I'm looking at an up and down or down and up whenever I want to take a leg. That's what I call a leg. If I'm looking at this leg and I want to print a weekly structure, I'll end up painting this place too much because I'll start from here. So I'll say this is a low, this is also a low, and then this is a low that's ended here before we found a high beginning. So basically I would have drawn the structure like this for the weekly. I would have drawn it like this, all the way to this high, all the way to this low, back to this high. Now this is where the problem is with taking this weekly structure, because if you're looking at this high as a clear high, price never closed above any of those points, though this is liquidity being taken. So all of this is liquidity being taken. If you take out this place, this is the liquidity being taken. Price comes down for a retest, and until this is taken, price hasn't made any reasonable level, right? So therefore we have this. So either way, weekly or monthly, we are looking for price to start coming down to this demand zone or this demand zone. And there's also a demand zone here I haven't drawn out. So one of those three demand zones. And then if price is to remain bullish, obviously it will take off from this point upwards. And that is the mission that we're looking to happen, right? Again, that is one aspect you're looking at the market from. But something else you need to really take note of is on the monthly, right? On the monthly, this is the last clear monthly zone we have. As you can see here, I labeled it with the M, meaning monthly. I do not like to see that plus icon most times because it's quite distracting. So what I'm going to do, I'm going to take it out. Yeah. So I'm already labeled this monthly. So if I'm going to take this seriously, I have this weekly zone and this weekly zone also. So these are the only two weekly demand zones I can see on this chart. Price could as well come to either of them, and then we draw the Fibonacci retracement. I'm not drawing it properly. I don't care about the drawing. I just want to know the 50%, whether it's drawing from here. Normally you're supposed to draw it from down to up, but I don't care. So looking at this is already below the 50%, meaning it's in a discount zone, but this is way more clearer in a discount zone than this. So basically we are hoping price comes down to this level instead. I would prefer price comes down to this level instead, and most probably this one, which is the weekly zone. And then we can say, okay, let's start to look for buying trades. In this case, what it simply means is we should be looking for shorting trades, right? Trades to short the market and hope for price to find its way at least to the 50% retracement, which is around here. As you can see, I'll take out the distractions because there are no distractions to me, though I kind of like all of them, meaning we're expecting price to find its way all the way to 1.73 at some point, but price could run, right? We're not saying price should, we're saying we are hoping for price to. On the weekly, we can't trade weekly because we don't have enough finance to do that run, and I cannot even see a demand zone clearly here, but obviously this return here is likely going to be a clear demand zone. But again, we've not seen price break below any structure for a zone to be created. And then we dive into the daily. Now with the daily, again, remember, I would like to look at the last structure from the weekly. This is the last structure from the weekly, and we want to draw a daily around this. So we're going to be starting from anywhere here. So we're going to be starting from anywhere here or here. Yeah, anywhere between these two parts. And I would like to just start from here already because price is already running downwards. I will simply pull out the daily show I already have set up. Now, the thing with the daily is, even if I start from here or here, I know this is literally a clear low for the daily view. And if we should start drawing the daily, I don't want to be drawing up and down anymore. I just simply want to get the structure quickly. So what I do is I'll bring up the zigzag indicator and I'll start squinting it down. And right there, I have the daily structure. I have this high that led to this low, this high, this low, this high, this low, went to this high, this low, high, low, high, this low, another high. So obviously we're looking for, if price is supposed to print bullish and come down to this, we're going to be looking for a substructure on the daily of 4 hours where we find a good supply zone around the top side of the market. But the thing is this, even when I look straight up from here, so I'll put my candle right here and I look down here, I'm not seeing any useful demand zone on the daily. And then let's go down to the 4 hours. Remember, this is still partially the daily time frame, daily time show. So in the 4 hours, I don't want to see this distraction right now. Let's immediately pull out the 4 hours information, and there we have 4 hour structure showing. I had already done all this analysis, and on the 4 hours, right, on the 4 hours, if we expect price to start pushing downwards from here, this is a clear demand zone on the 4 hours for price to start pushing down. But in my opinion, I don't think price is going to push down from there. I honestly don't think so. We would have had this as a beautiful demand zone, but it has already been completely utilized by everything we see right here. Properly utilized, no spaces allowed, and hence this is no longer a demand zone. We would have said this, but I don't see any inefficiencies around here for it to work. So basically, we do not have a demand zone on the 4 hours at the top. So we're likely going to see price most likely rally above this high before we start to see it push downwards towards this 1.73 mark, if it is going to push down again to the 1.73 mark. So all I want to see right now is uptrends, uptrends, and uptrends. Hence, this is no longer valuable to me, though I'm just watchful of it. Why am I watchful of it? The thing is this, price recently did a move, right? Weekend came through right here, and hence we have this gap in price. Now I do not know if price during the weekend reacted to this zone or even reacted to this zone before coming here for the open of trading hours again. We do not know any of this, so hence we are still looking at this as a kind of almost quality zone, but not so quality per se. And another thing is, we need to look at the entire leg and see whether it's in the, it's in the discount zone. And yeah, clearly you can see it's below the 50 and well within a very good demand zone between this 0.618 and 0.786 retracement. Hence, this is a good demand zone, and this is also a highly credible demand zone too. So basically, I'm expecting price to, break through. And if it breaks through, I'm looking for a clear demand zone here, clear supply zone here, sorry. I'm hoping for a clear supply zone here when price actually breaks through here and comes back for a retest. So basically, I am waiting for this to be a good zone. By the time this is completed, which would be in the next probably, let's see how many hours, we'll go straight to the countdown. So in the next 24 minutes, by the time this is completed, we have a show that okay, this is now a new 4-hour zone made. But until then, it is all good. So this is the market I'm currently eyeballing, the euro Australian dollar, and the edge finder is seeing it as a good bullish trade. The euro USD is also there, but the euro USD, I can't find clear ways to come into this market, hence I just left it, though I'm seeing one right now. It's because it has closed well. So we have one here. This is a clear zone to come into on the daily time frame, which is not so easy anyway. But on the daily time frame, this is a clear zone. But I don't think price is going to retrace to this level anytime soon, and that's going to be a long time before that trade is going to click through, if the market is still going to remain bullish whenever that happens. So this is all I can analyze for now. The New Zealand dollar against the Japanese yen moving in profits. The euro Australian dollar, I cannot find a way to come into this market yet. But the euro US dollar, I cannot find a way to come into the market yet. And then the euro Australian dollar, I am looking for a clear break of structure, that is the break above this, and a retest for me to say, okay, let's see if we can hop into this and see how profitable it is for us. Again, we had 2 trades, 1 loss, 1 profit. Hence we are above about $4,000 in 4,000 naira, sorry, in profit. And currently this has turned out to become a very good move. So thank you all again once more for watching, and do well to hit the subscribe button. We are looking at getting to 100 in the next 1 month. So I'd like you to hit the subscribe button, follow the channel, and follow everything we drop here. It is critical, it is good, and it is the real market, as real the market can be. If we're losing, you're going to see it. If we're winning, you're going to see it. And I know there will be way more wins than losses. So thank you all for watching, and see you all on another one. Peace. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang.